Never in my life have I seen such a strong employment number mean so little to the stock market. Once again, we had growth with no inflation, an expanding workforce, all good. But slightly higher wages, terrific bump in construction hiring, thanks in part to lower interest rates. And what happens? Well, the Dow ends up tumbling 277 points. The S&P sinks 0.54%. NASDAQ also loses 0.54%. Sell. All because we appear to care right now, at least, more about the coronavirus than about our own economy. And the disease seems like it's running rampant in China. In truth, we have the situation under control in this country, with just a dozen confirmed cases by the CDC. But in China, it's like they're running a triage operation with 50 million poor people cordoned off from the rest of society. So any game plan for next week needs to start with this virus and what it means for the Chinese government. Not good. The Chinese infected, horrifying, and the Chinese workers who might be summoned back to their jobs next week by the Communist Party. Draconian. President Trump spent the better part of the last 2 years trying to wean American companies off of Chinese suppliers. But so many of them are still dependent on the People's Republic, for parts at least, that I think we're going to see the first signs next week of the global slowdown that so many have been predicting, the one whose epicenter is in Beijing. How about individual companies? Okay. Well, we'll try to pick some that aren't deeply connected with China, so there's opportunities to make some money here. We're going to start with Allergan, all right? Now, this is it for Allergan. This is the last time it's going to be talking, as it was acquired by AbbView, which reported an incredibly strong quarter today, sent the stock up 5. I hope Allergan talks about its miraculous new acute migraine drug that was just approved. As the national spokesperson for the American Migraine Foundation, I know there are tens of millions of people who could benefit from this pill. So I'm betting it's a blockbuster, even as, candidly, they don't seem to know it. We also get results from Restaurant Brands, the owner of Burger King, and I'm worried that sales could be slowing here. We're seeing a real divide in the restaurant space between the haves and the have-nots, and Restaurant Brands may be slipping from the former to the latter. My favorites, don't overthink it, McDonald's and Wendy's. I think Wendy's breakfast is going to be very strong. After the close, there's XPO Logistics, and we want to find out if they found any takers for the divisions that they're trying to sell that Brad Jacobs, the CEO, talked about on our show. I think it makes sense to own this one going into the quarter. Tuesday morning, we hear from Hasbro. Ooh, this is complicated, right? I've been fascinated with the story for years. We know the toys maker's been tested through multiple trials, especially the collapse of Toys R Us. But now we need to know what they can say about China. I mean, how many toys are made in China? Can the factories they need to make toys on the cheap stay open? Then there's Under Armour, which has been in purgatory for ages. I hope they'll be able to make a comeback, but we have to stay close to their inventory issues and discontinued products. I think we can get some resolution into that federal investigation here. And, I believe that investigation is much ado about nothing. Lyft. Is Lyft doing as well as Uber? Well, we're going to find out after the close, but it could be difficult because we know now that Uber's turned a corner. Definite corner, with management talking about how they could be profitable in the fourth quarter. I like Lyft very much, and at this point, I think both could work. Pretty forgiving person. Wednesday, key, CVS, okay, CVS Health. We want them to follow up on all that good news we heard from CEO Larry Merlo at the JP Morgan Healthcare Conference a month ago. We need to know about the debt paydown, about possible assets they can sell, and about the health hub expansion. I also want to find out how bad our regular flu season could be this year, not just the coronavirus, because we need a little context. Now, I'm a big believer in gold. So pay attention when Barrick Gold reports. The company is the result of the Barrick merging with Randgold. That's run by the redoubtable Mark Bristow. I'm betting the numbers will be very good, but you own a gold stock like this one to vaccinate your portfolio against economic chaos. Then there's Shopify. Now, that's the e-commerce facilitator that's among the best performers of our time. They just keep delivering and delivering. I keep hoping the stock will come down again. I had one soon, late last year, because my charitable trust needs a decent buying opportunity to get back in. If we pull back after the quarter, that could be the chance to get into Shopify. After the close Wednesday, we get results from two big tech companies that have been under pressure in recent years. I'm talking about Applied Materials, the semiconductor equipment maker, and Cisco, the networking kingpin. Last quarter, Applied Materials put up its first good set of numbers in ages, and the stock rallied. But Cisco disappointed. I think AMAT can deliver again. Cisco, I'm calling it a show-me story. Thursday belongs to the strongest consumer packaged goods stock of our era, and that is PepsiCo. Lately, Procter & Gamble and Coca-Cola have challenged Pepsi's lead. How will they respond? I think with consistency, solid beverages, but insanely good Frito-Lay numbers. The stock is at an all-time high. So if they disappoint, you're going to be in a, let's say it's going to get hit. Still, I think you can buy some before the quarter and some after because it is that well run. You want to know what a bad company looks like, though? Kraft Heinz. They report, and they're in rough shape. I'd like to see some growth, acquired or otherwise. I'd like to see some divisions sold for a lot of money, or else the stock just remains dead in the water. Kraft Heinz has become the hallmark of inconsistency. We saw that great construction number this morning, and that makes me want to own the stock of Waste Management, which is more levered to the construction industry than anything else. Unfortunately, the stock's run in anticipation of a strong quarter on Thursday. If you don't own it, I say wait. I think world travel is being paralyzed by the coronavirus outbreak, but we'll know for sure when Expedia reports after the close. It could be very downbeat. I can't blame anyone for not wanting to travel when we know that cruise ships can become incubators for the disease and planes are full of people wearing surgical masks. We also hear from Nvidia, and you don't name your dog after a company unless you think it's incredibly special. And that's how the dog artist formerly known as Everest came to be called Nvidia. And he answers to his master's voice, at least as long as his master has a treat in his hand. Nvidia is the company that has the best chips for artificial intelligence, for gaming, data center. Stock's had a huge run. But with its new ray tracing graphics chips for gaming, I think it's worth holding on to. And I think you should buy some at a weakness. Dexcom reports, too, and this company, as you know, is delivered every time because it has the best blood sugar monitor for people with diabetes. I bet they do it again. I pray it comes down beforehand so you can buy some. Don't just go in the open market. Finally, on Friday, we have Newell Brands with its new CEO and a product line that's sold at stores like Bed Bath & Beyond. I'm not sure they can deliver, but the stock's so low, maybe it doesn't matter. The most important thing about next Friday, it will have been 14 days since the collapse of the market last Friday, when we pretty much closed our borders to travelers from China. The coronavirus has a 14-day incubation period, so that's when we'll know for sure if the disease is contained. The bottom line, as much as I want to focus on the earnings next week, keep in mind that this epidemic can steal the spotlight at any given time, like it did today, in spite of a phenomenal, terrific jobs report. Let's speak to Brandon in Indiana. Brandon.
Hey, Jim. Thanks a lot. Appreciate everything you do for a little guy here. Get ahead in the game. Got a question about Boeing, BA. Had a decent week, had a little bit of a fall today. What are we doing? Are we buying? Are we selling? I own a little bit at
I think Boeing's actually going to work out. I think Boeing's going to work out. I say that only because I think that we're closer to the MAX returning to service than most people think. But the stock's been up for 2 straight days. This is a stock that was down for today. But this is a stock that always gives you a kind of an opportunity to get in a lower price. So I would wait for that before I pull the trigger. Let's go to Dave in New York. Dave.
Hey, booyah, Jim. First-time caller.
Just
great, recently
Dave.
Invested in Sprint. With the judge's decision on a merger with T-Mobile due anytime soon, what are your thoughts about buying more stocks now or in the future?
No, don't buy more Sprint. Don't buy. I mean, look, it's T-Mobile that's the good one. T-Mobile wins if there's a deal, and T-Mobile wins if there isn't a deal. Not Sprint. Sprint's got a bad balance sheet. T-Mobile is a good one. I know that flies in the face of the interesting narrative of a $4 stock, but I got to tell it like it is because I don't want people losing money. All right. This coronavirus still matters to this market. And it's going to keep mattering until it's completely under control. We'll get more clarity next week. And we'll also hear from plenty of great companies. On Man Tonight, exiting the magical realm of unicorns. Uber and Pinterest are making some money. Or Pinterest is definitely there. And Wall Street is loving it. I'm giving my take on their new status. Then, sweet dreams are not made of these. I'm breaking down Casper's lackluster debut and what it says about the state of the market. And Taylor Morrison announced the closing of his $2.5 billion merger yesterday with another home builder. What's ahead for this one? I got the exclusive with the CEO. So stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.